Well, it's difficult. I mean, obviously, it's becoming more and more restrictive. So you have a certain size that you can acquire as a non-resident, and it's up to 200 square meters. That's it. You can, and the property has to be listed as a secondary in the property. Some of them are labeled as primary in the residence, other as secondary in the residences. So all of these aspects, have to be taken into account.
Welcome back to the hot seat. Delighted today to be joined by Bertrand Rassat, who's the founder and CEO of Primextate, who I met recently at PCD in Geneva. Welcome, Bertrand.
Thank you very much for having me, David.
So it was a pleasure to meet you in Geneva in our Middle East forum that we ran. For viewers who haven't come across you before, it'd be great to hear a little bit more about yourself and your business and the services you provide.
Yeah, sure, definitely. So Primextate is a private network of real estate professionals. We have today roughly 500 members across 13 European countries. We cover mostly Western European countries. And really our specialty, we specialize in off-market properties, both residential and commercial. So the profile of our clients is also of our members is actually interesting. So we have a mix of real estate brokers and agents, but also family offices, wealth managers, private equity funds, developers, and therefore we use this network to source off-market properties for our institutional and private clients. So we typically get mandated by corporations or private equity funds to source
properties on their behalf. Very interesting. On the commercial property side, I imagine things like hotels and there's retail. There's a lot. COVID is going to create opportunity, isn't it, for investors to come and make changes. What are you seeing in terms of commercial property? Are people ready to move and invest in order to try and redevelop certain property, or what's your sense of the trends?
Yes, there is a huge appetite, both from hotel chains, hospitality groups, and private equity funds to invest into hotels. There's no question about it. We cover three types of commercial assets: land, buildings, and hotel. But today, the hotels represent the bulk of our commercial properties because there's a lot of demand, and there is a shortage of properties across Europe. So that's why really they're usually happy to work with us because we have this existing network, we have people on the ground, and therefore we can find these hotels. But yes, COVID has definitely changed the whole dynamics, and I think that there is, as I said, there is a boom, probably in terms of investment into hotels. You can read articles, pretty much every day about hotel chains expanding their footprint across Europe. And the private equity funds, typically, I tend to work with the added value private equity funds. What they are looking is to either repurpose or to reposition, renovate hotels that they are investing into with the view to exit 6-7 years later, creating value. Yeah, in terms of, I was mentioning shortage of properties, commercial assets, and hotels across Europe. There are differences, from one market to another. The only place, and I get asked a lot about distress in the properties because of COVID, and obviously yes, COVID has created problems for many hotel groups and private hotel owners. But I think that again the picture is a little bit different from between France, Switzerland, UK, for instance, and Spain. In Spain, the government hasn't provided any subsidies to hotel owners. Therefore, those in Spain have struggled a lot more than their equivalent in France, in Germany, in Switzerland, and the UK. And therefore, I would say that Spain is probably the only market today where you can find some distress in the properties. And therefore, today, private equity funds, we get asked a lot by these private equity funds to focus on Spain and to find or unearth these distress in the properties, which obviously tend to be off market because they don't want to advertise about it.
Very interesting. And also city centres are changing quite a lot. I mean, in London, the City of London is still quite quiet. There's a sense that there will be opportunities for commercial property to change into residential. The way cities look will be different. Do you see that across Europe as well? And I know you're based in Geneva, or do you sense that there's less of an impact because in London there's many dynamics driving why the city is quieter, the length of the commute in the UK, and all of that plays into it? What's your perspective?
Yeah, London is unique, really in this landscape, and there's always going to be demand, in London, regardless, whatever happens. We've had Brexit, we've had the COVID, but the demand, is always there. On the continent, it's slightly different. Yes, in Paris, for instance, we get less demand. And I can see that, from, let's say I was mentioning the private equity funds that we work with, and we can see that usually their focus was urban centers, and now it is shifting towards resorts, south of Europe. So it clearly shows that there's a trend taking place. On the residential front, we are also seeing that. We're seeing almost some sort of a quasi exodus, from away from the cities, to the Côte d'Azur, for instance, Saint-Tropez, which was very quiet. If you look at the past 4 or 5 years in terms of new properties, new acquisitions, and sheer volume of transactions. I think that last year was probably their best year in the past 10 years. There's been a huge surge of demand. And there is, again, they're facing a massive shortage of properties. So the Côte d'Azur seems to have enjoyed a renewal, because on the back of that, of the crisis and the COVID. I would say that not so much Marbella, but the Mallorca, for instance, has been extremely popular lately. Greece. So you can find, some of these, hotspots, and you see that, they have clearly benefited from COVID and the fact that, people have been away from these, touristic, property, places, and obviously, they wanted to go back there, but they also want to invest and they also want to buy properties there, not just visit.
Very interesting. I think it also ties in with, it's widely reported a lot of yacht chartering, yacht acquisition through COVID, because it was deemed to be a great way to take a break. And I imagine the real estate markets, Côte d'Azur, as you say, but Greece, Mallorca, also benefit from that link to, in the ultra high space, link to yachting, marine, the lifestyle. It all fits in together, doesn't it?
It does, yes, definitely. And we can see, because we are partnering with the private jet companies or private helicopters companies, we can see that it's all part of that lifestyle. And beyond a certain price threshold, this is the type of properties, trophy properties that people are looking to invest into.
And to get access to these properties, I mean, I imagine the sort of the crown jewel properties in the south of France are such strong assets. How do you go about, if someone is exploring that as a client, what kind of budget do they come with? What kind of property might they get? What, give us a sense of the sort of assets that they might be looking for.
So we've had, it ranges, typically between 4 or 5 millions all the way to 50 millions, which is funny enough not that rare. And the profile is very different. So we've had Indian family offices, for instance. We've had German entrepreneurs, French entrepreneurs. We also have wealth managers who happen to be extremely wealthy themselves, and who acquired a few properties. But yes, that's the type of profile. And it's funny because some of them just want to use it for to spend a couple of weeks a year. And that's it. Other people are looking to buy properties, especially around the 5 million mark, with a view to also rent it and to optimize that rental dimension. And we're getting more and more of that, probably because there is a trend, there is more appetite for people from the cities to rent properties on the coast, And I think that, they have, many of these investors, have that in mind, when they are buying a property today.
And are many also using finance? I mean, not that for the ultra high, not they need it. It's just
all of them. They
there,
all do. They all do. Even if they buy a 50 million chalet or a 50 million property in Saint-Tropez, they all finance their properties because, again, it's part of the optimization, right? Today, the interest rates are so low. Why forego that possibility, really? So I would say that, all of them are looking to finance the acquisitions from 5 million, all the way to 50 millions. Again, not because, they're short, they don't have the cash, but just because they want to optimize, the acquisition.
Okay. And away from the coast in the mountains, I mean, do you also cover the sort of ski chalets and things like that? What do you see from that market?
Well, it's funny, actually, because the way we operate is that we try to follow the seasons. So, obviously between April and September, October, we work, very much, with, south of Europe and our members, in south of Europe and on the coast and sea resorts. And obviously, between now and April, we are focusing, our attention very much, on the ski resorts. So on both sides, France and Switzerland, and we see, clients, coming to us and mandating us, to source, off-market, chalet. And what is funny is that, Switzerland is a bit of a peculiar market because you have off-market, hotspots and pockets, pretty much across Europe. But in Switzerland, it's more or less the norm. Everything above 5 million, 75% of the properties above 5 million will be off market. So that's the only way to source those properties. And the way we go about sourcing those properties, as I said, we have independent real estate agents and brokers, but we also have private bankers, private banks, who work with us. They work with us because our practices are aligned with theirs. They know that we only deal with off-market properties, that the confidentiality aspect is very critical to the way we operate in general. And they like that, and they feel that we are fully aligned with them. So they tend to refer clients to us, and these clients can either look for properties or sometimes they want to sell properties. So that's also how we can get hold of some of these unique properties, and properties that are not available on the net, obviously. So we have these different channels to source these unique properties.
And foreign investors buying in Switzerland, there's many challenges there, isn't there? But say in the ski properties, I mean, how do you find that foreign investors kind of negotiate some of these challenges and get the properties that they want?
Well, it's difficult. I mean, obviously, it's becoming more and more restrictive. So you have a certain size that you can acquire as a non-resident, and it's up to 200 square meters. That's it. You can, and the property has to be listed as a secondary in the property. Some of them are labeled as primary in the residence, other as secondary in the residences. So all of these aspects, have to be taken into account. Now, many of our clients tend to settle in Switzerland because when they do that, they also negotiate what we call the forfait fiscal, which is a way to optimize their wealth. So they get they negotiate some sort of a tax rate with the local tax authorities of the canton, the Swiss canton. And at the same time, if they do that and if they settle as a resident, then there's no restriction, so they can buy pretty much any properties. And that's usually the type of profile that we're coming across.
Okay, thank you. And earlier on, you mentioned there's always a place for London. We obviously based in the UK see that a lot, but how do you see it from abroad in terms of international investors' demand for London? We've been through a lot of struggles with Brexit, COVID, all these different things. Do you see consistent demand? Any trends there in what you see from the outside of the UK market?
Well, the only trend that I see is consistency, really, and I must say that yes, even I'm very surprised because because yes, I thought that COVID and Brexit would have impacted the demand and the appetite of international foreign investors to buy in London, but that's not the case. There's always demand, whether it's from the States or from Asia, from the Middle East, from Europe. There's always, because I don't know, I think that if you have if you are part of what we define as the high net worth individuals, you need to have some sort of a pied-à-terre. You need to have some sort of a flat, even if you're not making London your primary residence. It's a little bit like it's part of the journey of your acquisition journey is to have some sort of a place in London. So I think that I see the complete consistency there. And on the commercial front, I see the same thing as well. I talk to private equity funds. I talk to family offices who want to invest in London because the yields, remain competitive.
Terrific. Well, look, Bertrand, thank you for talking to me today.
You,
I encourage our members with any real estate interest, with clients looking to invest across Europe or the UK, do reach out to him, and we look forward to sharing this discussion with them. Thank you.